head into 2025, let's talk about 3 key real estate trends we're closely watching in the Portland metro area. This includes Portland, the surrounding communities, and Southwest Washington. Let's dive in. First, a quick note about year-end stats from the RMLS, our local Realtor marketplace. They're great for giving a big picture view, like how the average sales price for 2024 compares to 2023. But keep in mind, those numbers are based on data going all the way back to January 2023, which means they don't reflect what's happening right now. That's where our weekly updates come in. While our data is more current, it's based on smaller sample sizes, so you might see some week-to-week swings. Still, when we zoom out just a little bit, we can spot trends that help us understand where the market is headed in the short term. So, with that context, here are the 3 biggest trends that we are watching as we're kicking off the new year. Trend number 1, pressure on sales prices. We've noticed a shift in sales prices. For most of the year, average sale prices were running 2.5% to 3.5% higher than the previous year. But in December, things flattened out. What's causing this? It could be a mix of factors: high mortgage rates taking a toll on affordability, sellers becoming more flexible in negotiations, or a higher number of homes in rougher condition hitting the market. Whatever the reason, this is a trend we'll be keeping a very close eye on as we move forward. Trend number 2, increased buyer demand. Since September, buyer activity has been significantly outpacing last year's levels. We track this by looking at the number of purchase contracts signed each week. In October, those numbers were nearly 29% higher than the same time in 2023. Even in December, with mortgage rates remaining high, demand was still up 8.25% year over year. Looking ahead, I expect buyer activity to pick up even more as we move into late winter and spring, especially if mortgage rates dip closer to 6%. Historically, that's the point where more buyers jump back into the market, fueling a surge in transactions. Trend number 3, potential for lower mortgage rates. Mortgage rates are still high, hovering near where they were in mid-2024. However, there's reason to believe relief could be on the horizon. Some analysts predict the yield on the 10-year Treasury, a key indicator for mortgage rates, could drop to around 3.75% by mid-2025. If that happens, we could see an average 30-year mortgage rates land around 6.35%, with some lenders offering rates in the high 5s. When rates dip to that level, we typically see a significant uptick in buyer activity, which could create a ripple effect across the market. Wrapping up, we have competing forces. We have more buyer demand, but lower prices, which you would think is not logical, because if there's more demand, it seems like prices would go up. The whole issue with the mortgage rates is really affecting things, so we are eagerly anticipating some more movement from the Fed. Thanks for tuning in, and I'll see you next week with the latest stats and insights to keep you ahead of the curve. And Happy New Year, everyone!